analysis and how to consider them when we want to take trade. And fundamental analysis, the definition for that is quite very simple. Is the evaluation of economic, financial, and other key variables known as fundamentals to determine the true value of an asset. Okay, yeah, so let's start right now. So right now we'll be looking at technical analysis and fundamental analysis. We're going to look at the key difference between the two and why and how to consider them when we are taking trades. And so we are going to start with the distinction between technical analysis and fundamental analysis and how to consider them when we want to take trade. And fundamental analysis, the definition for that is quite very simple. Is the evaluation of economic, financial, and other key variables known as fundamentals to determine the true value of an asset. And then this will then give us give us a pre-informed decision whether to buy and hold a cryptocurrency or sell that cryptocurrency. Now, it's quite different from technical analysis in that technical analysis focus more on trading decisions based on market trends, historical price action, and visible patterns, which are usually recognizable by major market movers. And so by fundamental analysis, we want to look at news. We want to look at the news that surrounds cryptocurrency, and if we have news that are positive with what we have in mind based on technical setup, then it's going to give us a very good high probability setup. And then if we have fundamental analysis that goes against our technical analysis, then we really just want to wait a little to see how price reacts to that negative news. Then after that, we can then go ahead with the trade. We are going to see those examples quite very soon. And so by fundamental analysis, we are majorly talking about news headlines, majorly news headline. And this is different from fundamental analysis as regards forex market. In the forex market, we have interest rate decisions, we have monetary policy decisions, we have those non-farm payrolls and all those things that usually determine the direction of price for quite some while. And unfortunately, right now, in the cryptocurrency space, there is no intrinsic value for now, and it is not really being affected by monetary policies of government and all that. So you don't have most of all those news that will determine how price will move aggressively at those periods. But in the cryptocurrency space, majorly, most of the time, there are usually speeches, or they are usually, speeches of maybe Elon Musk, or they are usually headline news of certain countries that have adopted cryptocurrency or looking at the possibility of making it work in a country, or maybe PayPal switching to cryptocurrency, Visa also adopting cryptocurrency. Those are positive news that can drive the market to make it go up. And on the contrary, speeches also by Elon Musk talking about how price may go up, will go down very soon. Some countries or some companies, major key players in the market, whales and all that, selling off their some certain amount of coins, etc. Those are the kind of news that can be very bearish, and then you want to just watch how price react to them. So if you ask me which one goes well, which one should you focus on when you want to take trade, I would say that you just have a follow-up of the news and then focus majorly on the technical setup. And the reason is because most of all those fundamental effects, they are right there in front of you in your chart, and so you'll be able to have an understanding of what price may do, even if you have not read any news at all. And we are going to see those instances very soon. So I'll do two websites right here where you can follow up on the news that surround cryptocurrency. So let's quickly go there and see how that page is. Okay, so this is Coins Live news right now, and as you can see, the last news that we have about an hour ago is talking about Microsoft and Intel introduce a shield against cryptojacking, which that means it is positive. On Marshall listing on Ascent X is also positive, and this is how you just try to find out the news that surround the cryptocurrencies space. Elon Musk owes to his Bitcoin, but why Tesla sold 10% of its Bitcoin? It's both positive and negative depending on how you want to view it. Bitcoin funding rate fall flat for weeks as market takes pause. So this, for instance, this kind of news is a little negative. So sometimes if you are trying to go through the news, you may not really get a good understanding. You may not really get a good understanding whether it's going to be positive or it's going to be negative. But by the time we get to the technical setup, you see the effect of those news right there on the chart. And then the second one is the investing.com/news. Investing.com/news. Let me just move this up a little. Investing.com/news/cryptocurrency news, and then you'll be able to see some of this news there. Also, this is about 10 minutes ago, 30 minutes ago, 50 minutes ago, and all that. So Tesla booked each profit from Bitcoin sale in Q1. It's also positive. Altcoin hit new high after bulls kick Bitcoin price back above 50k. It's also positive. Mark Cuban tries to convince Eliande to accept Bitcoin. It's also positive. So we have positive news right now still surrounding in the cryptocurrency space. And so what you want to do sometimes is to subscribe to notification, alert notification, so that anytime this kind of news drops in, you are on the alert. You are being sent. It will appear right there in front of you, and then you'll be able to know if you are going to be taking trades at that period. You'll be able to know whether to pause, or if you have a very good technical setup that supports that news, then you want to go ahead with your trade. So like I said, you should allow notification to get informed right when those news reports are released. And let's look at in-depth of what technical analysis would be. So by technical analysis, we are talking about financial trading. That means trading the financial market. And it usually consists of buying or selling an underlying amount of assets in a financial market with the intention of earning a speculative profit. So whether price is going to go up or price is going to come down, you want to speculate for profit. And that is why if you are a trader, you are not really going to be bothered about the fact that the price of Bitcoin wants to go up, because on either direction you are going to still be making money. So our intention here is to buy low and sell high. That is the general perception of the market. There are some times that you are going to be buying high and selling low. We'll see those instances very soon. But the general idea or the general rule is that you look for a low to buy, and then when price has gone high, you sell. And then we buy it again when the currency goes down, or sell again when the price further goes up. It is not easy as it appears. There are lots of variables attached to it, which is technical analysis, which we are going to be talking about very soon. We just finished talking about the fundamental analysis, and then market sentiment. Market sentiments deals with the perception of people regarding the cryptocurrency space. Right now, it is still a mixed reaction. Sometimes people really dance to the fact that cryptocurrency is here to stay, and sometimes you have people talking negatively against it. So basically, trades are also investors. Traders are also investors, but they are more interested in knowing price fundamentals so as to make adequate investment decisions right on time. So what I'm saying in essence is that we traders, we are more interested in knowing price fundamentals to have speculative profit, and we want to also follow up with the fundamentals once in a while, so that we are not caught unaware on the possibility of price going against the trade setup that we have in front of us. So gain from trading can be significantly higher than gain from ordinary investor. And what I mean here is this. That's the truth. It's the truth that lots of traders out there make significant amounts of profits trading the crypto market, and it can be quite much more than people that just buy the cryptocurrency and just leave it to grow. And the people that make money trading the cryptocurrency market are people that have quite enough experience trading the financial market. That means those people that trade the financial market, or those people that trade the crypto market, are people that already have understanding about how to trade the forex market, the stock market, indices, the commodity market, etc. So it is the same technical analysis that applies to all the financial instruments. As far as you have a very good understanding of technical analysis, you can apply it on any financial market. And they make significant amount of money trading it, much more than those people that just buy and hold for it to grow. And we are going to see those instances and we understand them better quite very soon. So what I'll just tell you now is that if you are just relatively new to trading, you want to take some time to practice and practice well before you have said this before. You want to take time to practice. It's not something that you're going to be learning within a matter of 3 days. 3 days is not enough to be able to cover and be able to start trading the financial market. But with this kind of training, to give you a head start for you to be able to know, you'll be able to know how to then approach the market, how to start slowly, and then from there become a trader later on. So let's take a further step up into technical analysis, and by that we are just saying that financial analysis that uses patterns in market data to identify trends. So I'm going to be underlining this: identify trends, make predictions of future market directions. So when you are trading, basically you are more of an analyst that understands trends of the market, and then you are using that trend to have to make a prediction of where price may most likely go to in the future. So an analyst could further read up on fundamental and news as a way to double check its technical analysis. So what I'm saying here in essence is that despite being a technical analyst, that means despite looking at trends to determine the price direction, you also want to have some understanding of the fundamental that surrounds the crypto space, to know when to take a trade or when price may most likely go against your technical setup. So by history, technical analysis was formed out of concepts gathered by Dow theory. Charles Dow was born in 1851 and he died in 1902, and it was an American accountant back then, and he developed the Dow theory with the basic assumption that underlying all technical analysis in the market price are not purely random, but move in identifiable patterns and trends that repeat over and over time. So what we are saying here is, in essence, is that if you look at your chart, by the time you go to your chart, it may look as if price is just going up and down, up and down, up and down. No, it is not random. What we're saying here, in essence, is that there's a reason at which price is moving up or it's going down. And most of the time, when they are doing that, they are forming patterns. They are forming patterns that are going to be identified, going to be immediately identified and followed up by those that knows what those patterns are. And when they see those patterns forming, they know what wants to come next. And the reason for this is that as it is forming patterns, it is forming patterns that has already been formed in the time past. And so you can use an understanding of those what happened in time past when price was forming that pattern, what happened next, to then have an understanding of what wants to happen now in the current price chart. And that's what technical analysis do, because those patterns usually repeat themselves over and over and over again. And then you, as a technical analyst, you want to try to get familiar with those patterns so as to know what wants to happen in the market. Use that to predict what wants to happen in the market. So, what should you know if you want to be a technical analyst, or what you should focus on when you want to start trading the cryptocurrencies space? Now, this is applicable to the forex market, and so I'm going to try to take away a whole lot of things that you don't need right here, so that we just make it as very simple as possible, and then by yourself you can do further research on the rest, which is why I decided to itemize them here. And for those that are my students, they already know most of those things. I've already taught them, so it's just for you to also have an understanding of how these things play, and then we are going to try to make it as simple as possible so as not to get you confused when trading the cryptocurrency market. So the first one is chart patterns. We are going to be looking at chart patterns right here, and then followed by candlestick formation. Now, okay, let me first list them, and then I will explain how we are going to be dealing with them. Then followed by Helios wave theory, and then Fibonacci applications and trading techniques, and the market structure and multi-time frame analysis, followed by oscillator confluence strategy, and then followed by volume spread analysis and price dynamics, and pivot points and price level trading course, and finally harmonic pattern course. Now, these are the courses I usually do train people on when you want to start trading the financial market. But my understanding of the cryptocurrency market is that yes, you can apply all these things, and you can apply all this, 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 apply all this.
Yeah, sorry guys, can you guys hear me? Hello guys, can you guys hear me? Okay. I have two systems in front of me, and then one of them just tripped up right now. I guess because it took the light, and then the UPS was kind of very weak on it. So I'm just trying to log in back to it. I've just restarted it, but let me just continue on this second system. And so what I was just trying to explain to you right there is quite very simple. Now, most of all this training that I do offer for people that want to train forex, what I've listed right here. Now, for the crypto market, I understand that the crypto market is not as complex as the forex market, and as a matter of fact, it's generally bullish in nature, as at well, uh, the time of this training right now, the crypto market is generally bullish in nature, and so it doesn't require most of all those technical analysis that is involved in forex. So what we are going to be talking about basically in the course of this training, I'm going to explain chart patterns to you extensively, and I also gave you guys the websites, the Club Night Forest Academy website, for you to go and watch the candlestick formations. I don't know if some of you have had time to go there and register and watch them, but I'm not going to be talking much about the candlestick formation. You still need to go there to go and watch the candlestick formation, because there are some things it requires a lot of things that I'm not supposed to explain them right now. If I want to go into the details of those ones right now, it's going to take a lot of time for us to complete this training exercise. And so I believe that we would have gone there and then we would have at least watched most of all these things that was explained under the candlestick. Now, the Elliott Wave theory course is even much more complex than the any other course that you can talk about out there. And I'm just going to explain the concept of Elliott Wave to us so that you understand the concept. And then if you then feel that you want to really know Elliott Wave theory on its own, we can talk about that one later. But right now we are not going to be going into the details of Elliott Wave, but I will explain the concept to you. Now, Fibonacci applications and trading techniques is also not what I'm going to be explaining to you right now. But I'm going to let you see how you can perform multi-time frame wave analysis, starting from the 4 hours and the 1 hour time frame, and then we'll go to the 15 minutes time frame to get our entries, and then we'll look at oscillators conference strategy, in which case we are going to be using the RSI. On the website, I talked about using the MACD, that is the moving average convergence divergence indicator. But right now, for the crypto market, I can see that the RSI tends to go more with the crypto market than even the MACD. And so I'll explain the MACD, I will explain the RSI to us, and then you can further add to your knowledge by going through the oscillator conference strategy, which is free on the website on club9forexacademy.com. And I'm still trying to think through whether I should expose you guys or talk about volume spread analysis. It's also a very comprehensive course. But in the course of taking some trades, I'm going to let you see how to watch out for volume as at the period when you want to take trade, to confirm if people are actually taking those trades in the direction of what you want to take or not. Then this we are not going to be talking about it. And then harmonic pattern course is also a very complex course which we cannot deal with right now. But there's a scanner that helps us scan through all the markets to detect all the harmonic patterns, and you have it right there on your chart. So these are some of the things we are going to be talking about today. And I think my second system is up right now, so I can try to switch to that. So right now, I'm not going to, okay, so I'm going to start with the concept of chart patterns. Now, how many of you have gone to the website to watch the candlestick formation course? I'm waiting for you guys. So are you saying that none of you have gone to the website to watch the candlestick formation course? Okay, Esat says she has. It will be okay, nice. So we have two. Okay, we have three. Okay, Chukutu have also gone through. So did you watch? Did you watch? Did you watch all the videos there, or you only watch few? Because I'm just trying to see if I should mention certain things right here, or if we understand them, then we don't need to. So did you watch through all the videos on the under the candlestick formation course? Okay, Esther says no. Okay, Chuku, yes. Okay. Give me 1 minute. My second system is up, so I need to switch off the second one. Okay, so I could see that a whole lot of you guys have not really watched the candlestick formation, but we are not going to be talking about it, and that's the truth. But when we want to take rates, I'm going to mention it, and you will see
how to apply candlestick formation when you want to take trades. I've just switched to my second system. Please kindly confirm my audio there so that I am very sure you guys can hear me. Can you guys hear me? I just switched to the second system right now. Okay, thank you. So give me just 1 minute, or just 1 minute. Let me just quickly set up the second system, and then we'll continue. Just 1 minute. Okay, so what I want to do right now is to give you a good understanding of what is covered under the chart patterns, and we'll see the application by the time we go to our chart. So under the chart patterns, we have the flag. First, we have the flag, and then second, we have channels. And then third, we have triangles. And then fourth, we have the double top or bottom. And then fifth, we have the triple top or bottom. Triple top or bottom. And then sixth, we have the, do I have any of my students here? Let me just check. Okay. Where is this guy? Okay, the sixth one, we should have the diagonal structure. No, let me just, the sixth one should be cup and handle, but we are not going to be talking about the cup and handle right now. Cup and handle. The seventh one should be shoulder head, shoulder pattern. Shoulder head pattern. And then the eighth one will be the diagonal. So these are basically most of all the chart patterns we are going to be coming across when we are looking at our chart. And we'll look at some example in our chart very soon. For our trading techniques, we'll try to focus on flag, and also the triangle, and also the shoulder edge shoulder pattern, and then finally the diagonal. Those are the four that are used the most. Now the channel is just like flag, but if you go to a lower time frame, a flag on the higher time frame is usually like channels on the lower time frame. So they are quite related. The concept of this is quite related. Now, most of the time, these first three are used for continuation. That means, let's say price have been moving in the upward direction and then it starts moving sideways. Then after that, it's going to continue in that form. And most of all the structures that you can form right here is what I've itemized in the first three: the flag, the channels, and the triangle. And then let me just take this out. And then I do use the shoulder head shoulder pattern quite a lot of time, and I'm going to be giving that example very soon. And I also do a lot of diagonals. So the first example we are going to be looking at when we want to backtest our strategy, we are not going to look at, we won't, how will I explain it? We will not try to apply all this concept. We will assume we don't have their knowledge at all. And we are going to go strictly using the indicator signal. That means if the indicator say buy, we buy. We are going to act as if we are dummies. We don't know anything about the market. Indicators say buy, we buy. Indicators say sell, we sell. But then after that, we now assume, okay, we have this knowledge, and then we'll use it to know how to filter out the bad signals from the good signal that is being given by the indicator. The fact remains this. Most traders in the financial market lose money because they trade without understanding what is in front of them. They trade based on indicators, and then they don't apply good risk management when trading. I've already explained to us what risk management is, which is that you are supposed to cover much more profits than your loss, so that just in case you have very few wins, it's going to cover up for most of all the losses that you have encountered. And so that's just the basic idea about risk management. And so even if you are going to be using indicators to trade, you want to have an understanding of these structures. So I'm going to quickly just take out this, and then, okay, let me explain what flag is. Now, the flagpole of a country, how it looks like. The flagpole of a country usually look like this. Usually look like this. This is the handle, and then you have something like this to be the place where it is drawn. So this is just very close to what you're going to be looking at on your chart when you want to take trade. As a matter of fact, when price wants to start moving sideways, it can do something like this. Then after that, it will then continue in the direction at which it wants to go, in this direction. So if you start seeing that price actually give you this kind of consolidation zone, you want to start looking at the possibility of buying at this area or possibility of buying at this area. This area is what we call the aggressive entry. And then this area is what we call the book entry. This is where the book says we should enter. But this is where, if you have these trading skills and you can read the chart very well, this is the better way to enter the trade. The reason is because if you are taking a trade here, your stop loss is going to be very close to your entry, which is going to give you enough room for you to cover for your profits. Remember, our target is to have a very good risk reward ratio. So if you take a trade here, it's going to make your stop loss to be quite small and compared to your target. But if you take a trade in this area, your stop loss is still supposed to be here. Now, if you want to follow risk management, it means that your target is supposed to be somewhere around here, because this is the length of your loss, and then your target is supposed to be ×2 of that length, which is that. So it is usually advisable that we try to get our entry here, but the fact that you didn't get your entry here does not mean you cannot take the trade. It only means that your risk is now going to be wide, and then you need to target enough to cover your risk. Now, the second one is that I'm going to be talking about is triangle. And then this is how the triangle look like. Let me just take out the inside one. Now, just like I explained to you before, the channels is very close to the flag. And so the concept behind the two is very similar. The only difference between the flag and the channel is mostly that our channel used to go quite longer in length before it breaks out. That means it's going to be moving, price is going to be moving in the sideways direction for a very long time before it then breaks out. But if you then go to the lower, then go to the higher time frame, on this setup, it's going to be looking like a flag on the higher time frame, and which is why I said that the concept behind it is similar. Now, for triangles, we have different types of triangles. Your ascending triangle, descending triangle, contractory triangle. Which other one again? Ascending, descending, contracting, expanding triangle, and I think about 5. Okay, the 5th one should be, who can remind me this 5th one? A running triangle, yeah, running triangle. But irrespective of the kind of triangle that you have, the difference is that in the triangle setup, you usually have price to move in 5 waves within the corrective phase. To move in 5 waves, and you'll be able to see that this is forming a triangle. And most of the time after that, it will continue in the direction that it was before. So if you are in a downtrend, price is moving in this manner, and then after that, it moves in a kind of 5 waves correction. And then after the correction is done, it will supposed to then continue moving downwards. So those are, I'm not supposed to delete that. So those are some of the things you need to understand regarding the triangle and then the flag. Now, for the shoulder head shoulder pattern, so for this one, we usually use it for continuation. We usually use it for continuation, continue, and this one also for continue most of the time. Now, when we get to the shoulder head shoulder pattern, I don't want us to talk about the double triangle and double top and triple top, but it's part of what we may see trading. But they may confuse you most of the time, which is why I try my best to just trade the ones that the pattern are quite very clear. Now, for the shoulder head shoulder pattern, this is how it looks like. Now, if you look at the formation of an human being usually will look like this. Let me try to draw someone. Who can I draw now? Who is my friend here? Okay, I can see Gibbs. Okay, I want to try to draw Gibbs now. So I put his eyes here, and then the nose here, and then the mouth here, and then this is the neck. And then you can see that he has a shoulder right here. He also has a shoulder right here. And then this is the body, the leg, and the leg. But for us right now, what we want to look at is this area of Gibbs. Is this area of Gibbs. That means he's raising his shoulder up. He raised his shoulder up in this area. Let me use another color for that. Which one can I use now? Black. So he raised his shoulder up in both his shoulder up. You know, in Yoruba we say ongapa. So he's raising his shoulder. And that's just the concept of the shoulder head shoulder pattern. And it appears quite a lot of time in the market, any financial market so far. So what we're saying in essence is this: price has been going all the way to this in this top, and then it wants to reverse. Immediately it wants to reverse, it's going to start forming that shoulder head shoulder pattern, which if you do not know that is what wants to form in the market, you are going to be taking the trade at the very wrong time. So you may take a sell around here. Let's say the RSI gives you a sell signal around this area. And the price only came down a little, only for it to then come up further the more. Now you can see that it has formed the head. So immediately this is happening, what you should have at the back of your mind is that most likely we are having a shoulder head shoulder pattern with a possibility of a divergence on the RSI. But I don't want to confuse us with most of all those technical terms. And after that, it will come and then form the second shoulder. And then eventually we are going to be breaking that neckline. So this is what it's going to do eventually. It's going to do something like this. And after that, then go down. Now the book entry says that this is where we are supposed to take the trade, our sell formation. In a bullish market, I want to start going down, a sell formation. But the aggressive entry is at the head. So if you can get to take it at the head, it's going to be giving you a very small loss area for you to choose your stop loss. It's going to give you a very small area for you to choose your stop loss, and then a very good area for you to get your target. Now, if you are not able to get it at the head, then you go for the book entry. Now, the book entry has two areas. The first one is this area, or the second one is this area at the retest of the break. We call this one the neckline. This is the neck of Gibbs. So this is the neck, and when it breaks, most of the time it's going to come back to retest where it breaks before it then goes down. So if you fail to get the entry here, you can also guess the entry here. And that gives us a very good formation of the shoulder pattern. In the reverse, in a bearish market too, that's what you're going to be experiencing. Price is going to be going down. Let me use another color for the bearish market. Price is going to be going down, and then it can form an inverse shoulder pattern. In this case, we call it inverse. That means it's going to first go up and then break down and then do something like this before it then continues. And it's going to be similar to what I've already explained to you, but in this case, in a reverse formation. And so this is the first head. I don't know if I'm getting too fast, but I just feel I should just explain this to you. And then this is where you're going to be taking the entry for the book value and the book entry, but the aggressive entry is usually here. Very hard to get the edge, but if you're able to get it, it gives you a very good area for your risk reward ratio. And then last but not the least that I'm going to be explaining right here is the diagonal structure. And the diagonal structure is just like the normal triangle that you know, but it's going to be slanted towards the end of price movement. So if price have been going all the way from the low, And then after some time, instead of it to form the shoulder edge shoulder pattern that I just told you, it's going to be forming something like this most of the time. So if you get to see this, it means that you just draw a line right here. Let me use a proper, you just draw a line right here, and then you draw another line right there. And so the book entry says that our entry is supposed to be somewhere around here. The book entry says that we are going to be taking it at the break of that triangle, which is going to be somewhere around here. However, the aggressive entry is going to be at the touch of this line that you draw, so that your stop loss can be very close to your entry, and then you can have a very good space for your target. And so these are the things that we need time we want to take trade, so that when the RSI is giving you a signal, you can build on that concept that you know to filter out the good ones from the bad ones. I don't know if you have any question first before I then go further. Any questions so far? Any question, guys? Okay, I believe there's no question, so I can continue. Are you saying I can continue? The diagram was not clear, but you can continue. Okay, you'll see a very good example very soon. Don't worry about that. You'll see a very good example very soon. Okay, so I'm going to show you some of the trade examples that I gave in the what do you call it? Yes, I'm going to revisit it. Don't worry. I'm going to show you some examples in okay, I've not put in my Telegram. I'm going to show you some of the examples I gave in the group so that you understand what I usually look at most of the time when I want to take trades. And then that's what I do regularly. And if you have those kind of knowledge, it will help you to know how to do that on your own. So let me quickly just share the Telegram group, which is this. And then you would see that I most of the time used to give those kind of trade signals. Now, let me quickly look at a good example of a diagonal. Okay, now this is Ethereum, and as a matter of fact, this is one of the good example of diagonal, and you can see that price was moving in this way, and immediately it touched this line. I was saying that we might most likely be getting a sell off around here. So let me just quickly see another good example of diagonal structure. Okay, another one is this. This is also another very good example of that. You can see price of moving, and immediately it got to the line for the third time. I gave a trade setup that you should look out for a flush immediately from that spot. And what happened after that? You are going to see those examples very soon. Let me just show you the before and after. That's signal call. You can see what happened in market. Price went exactly as predicted, and it's just based on the concept of impulse correction and then impulse as we have it in the Elliott wave course, which I'm going to be showing you very soon. Another example is like this. I gave it in my Telegram group that price may most likely be selling off at this point, and that was what you had exactly that happened. So you can see in the two examples that I just showed you right now, in the two examples I just showed right now, I had an harmonic pattern that gave me a confirmation of that exact area where price may most likely be rejecting. And this also, I have an harmonic pattern that gave a confirmation of where price may most likely be rejecting from. Okay, this is the same Ethereum, and then even right here for this one, this is a blank chart, and so the prediction I gave was that price is going to first go up a little, then flush down, and it's actually went up quite much a little than where I thought it would get to, but the overall trade idea was that it flushed down immediately it got to that area. And so at the end of this training course, you should be able to also have an understanding of how I was able to see this coming even before price got there, and then you should be able to do those things by yourself. And this is also another example. Immediately price was getting here, I was saying we need to watch out for it, for a sell setup around here, because we can see that price was respecting this line and immediately got to that area. It also respected it and flushed down. And that one is IOTA, and then this one is Bitcoin. As you can see, I expect that after this movement, the price is going to just consolidate a little, then break out of that area, and that was exactly what happened. Price broke out. So you are going to understand this concept so that you will be able to you'll not be caught unaware of price. You'll be able to know or have an understanding of what price wants to do way before it does them. This is also another example, as you can see right here, that I gave a prediction that price will most likely sell off from that spot, and that was exactly what happened. So there are lots and lots of trade calls that I've given in my group, and the only reason why I've even decided to then make this training available because, you know, just a very few people are there, and most of them are not taking trades. They don't really understand how to go about taking those trades. So I decided, okay, let me take time to really train people so that when I'm giving this kind of stuff, it doesn't just go like that. There are lots of people that will appreciate having stuff like this. And so the last but not the least that we are going to be looking at, price got to this area and then it flushed down. So with this training that you're going to be having right now, you also have an understanding of how to predict price even before it gets to that zone. And so just like I said before, we will not be able to go through all of them in depth. When I want to train people on the forex market, it takes us about 3 to 4 months of training and all that. So it's not something you can do within a few hours. But then I have a website that I've built, and most of all those training videos are there, which I also make some free. So I've made the candlestick formation free, which we are going to be talking about. We are going to be applying those concepts in this training. So if you go to your web browser and then you go to Club 9 Forex Academy, which is what you can see right here, club9forexacademy.com. It is free for you to register and watch the basic videos, the basic training course, which we are going to be talking about some of them today. So let's quickly go there and see those videos. Let's go to the page now. So this is the page. If you go there, you search for club9forexacademy.com, and then you'll be able to it will take you to this page. Actually, this is the page, and then all the courses are there, and what you just want to do is to just watch the videos that relates to the cryptocurrency page, and just click on become a student. So if you click on become a student, it takes you to this place to register. But that's not what's that's not what we are going to be doing right now. You can register later on. I'm just going to click on login, and then I'm going to immediately go to that page. So this is how it is on the page, and then you don't need the first part. You don't need these ones. Those relate to the forex market. You don't need them. But if you feel you still want to have an understanding of what the forex market is, then you can go through them. So basically what I'm saying here is that most of all the things that I will have done for crypto is what I've already explained to you guys in the introductory part. And then the part that relates to what you want to understand right now is the candlestick formation course. And then right there we have background of candlestick, and then what we call rejection candlestick, exhaustion candlestick, and continuation candlesticks. And we have understanding of doji, maribozu, the hammer and the hanging man, inverted hammer and the shooting star, engulfing and tweezer candlestick pattern, morning star candlestick pattern, and then the evening star. So these are single candlestick formation, double candlestick formation, and triple candlestick formation. And right there, I have made them to be free. So I'm just going to be mentioning them in the course of this training right now. and then you can go to watch the videos to really master them, so that by the time you want to apply them on your charts while trading, it should be quite easy for you. So, but the chart pattern courses are not free. So what I'm going to do for this training, you guys are even quite lucky. I'm going to be talking about most of these chart patterns today, and we're looking at what channels are. I'll also be talking about the shoulder head shoulder pattern and the wedge or diagonals. These are the ones that you need for the cryptocurrency. Okay, and also the triangles. These are the ones you need for the cryptocurrency trading. You need the flat, you need the triangles, you need the edge shoulder formation, and then you need the wedge or diagonals. And then last but not the least is the oscillators confluence trading strategy. This oscillator confluence trading strategy is also free. You can just go and watch it. And we talked about both the divergence of the MACD and the RSI. But for this training, we are going to focus on the oscillator of RSI, and then you'll see how to combine all these things together that will give you a very good. So just like I said before, those parts, the introductory part, are free, and these ones that you need for the crypto, I'm going to be talking about that today. And then the oscillator, I'm also going to be talking about it today. For the harmonic pattern course, for the harmonic pattern application course, you can get any good harmonic scanner. That's just the truth. But make sure the harmonic scanner does not repaint. As far as it doesn't repaint, it's going to be good for you to backtest your strategy, which we are also going to be doing together today. So let's go back to our slide, and then we go to how we are going to combine all these trading systems together. So what we are going to do right now is that we are going to download MT4, and we are going to do it both on our mobile phone and also on our desktop. And we need this to do our technical analysis. So I'm going to show us how we'll do that right now. And then in the server space, we are going to search for JAFX or Simple FX in the server space and open a demo account with either of those brokers. But I will recommend that you go with JAFX because they have more markets to trade compared to Simple FX. And we'll then open a demo account with them and connect our demo accounts to desktop MT4, and you will see the reason why we need the MT4. And let me quickly explain. The reason why we need the MT4 is that we are able to do better analysis on MT4 compared to the Binance chart. That's number one. And then number two is that we want to be able to get notifications whenever price has gotten to certain level, which we are not going to be able to get if we are just on the Binance chart or on TradingView. And we also want to be able to combine our price action indicators for us to get confirmations of trade at those trade levels, which we are also not able to get using either the Binance chart or the TradingView chart. So what we are going to be doing is to only have a demo account with the MetaTrader 4 broker. We are not going to be trading with them, but we use those ones for analysis and notifications and price action trade setup. And then when we want to take trades, we then go to Binance charts to take our trades. We'll see how this is going to interplay very soon. So we are going to change our password to the ones that we can easily remember, and then I'll show you where to download the RSI. It is free. All these indicators are free, and then I'll set the RSI for you or show you how to set the RSI so that you can receive notification right there on your phone anytime price has gotten to certain level. When price has moved significantly in a level, it will send a notification for you, and then how to go about checking for price action after that point, after that notification. And then you can get any good harmonic scanner. I have the one I sell to my student, but I don't want it to be as if I'm imposing that on you. No, you are free to use any good harmonic scanner, but just make sure that the harmonic scanner does not repaint. And the reason why you want a non-repeat harmonic scanner is so that you can backtest your strategy to know how price reacts when those harmonic pattern comes, and what you will have done if you were taking those trades. So it's usually very essential that the harmonic scanner does not repaint. And then on our chart, we are going to be setting and we are going to be basing our price action analysis on the 15 minutes time frame, for our entry, and then we are going to set notifications for 1 hour time frame and 4 hours time frame of the RSI. You see all these things very soon, and then we'll set notifications for them and watch out for candlestick confirmation on the 1 hour and the 4 hour time frame. And then of course we're going to see how to backtest our trading system and get the win rates. We'll be doing all these things together right now, and then you'll be able to then determine, and then you should determine your risk reward ratio. We've talked about money management and risk management, and then with the back test of the trading system and the win rate, you will use that to determine what your risk reward ratio is, and then see how you will have been able to take trades, and then use the money management or risk management to quantify your risk price levels before taking the trade on the Binance chart. This may still look very abstract, but very soon right now it's going to be clear to us. So let's try to start with the first one, which is to download the MT4. And then when we download the MT4, the next thing we are going to do is then to set up and disable the forex currency pairs. We are going to disable the forex currency pairs from our chart so that it only shows the cryptocurrency pairs that we want to get notifications on, and then we'll set the RSI. Don't worry, we'll go through all these things. These are just like the to-dos of what we are going to be doing for us to get a very good price action trading setup, both on our mobile phone and also on the MT4 desktop. So right now I'm going to connect my phone to the screen so that you guys can see it, and also we are going to go and download MetaTrader 4. So just go to your browser and then download, search for JAFX MT4. You can see JAFX MT4, just click on it, and then you'll see trading platform JAFX platform. Just click on it, and once you click on it, it takes you to the web page. And then you can download the MT4 directly. Let's see, trading platform, download the FX MT4. So once you click on it, it automatically downloads. But in my own case, I've already downloaded it. So okay, let's just go through it together so that you understand the process flow for those of you that are still relatively new to trading. Okay, so right now it has finished downloading, so you just click on open, and then once you click on open, it's asking for this. You click on run, and then right here you just click on next. And then once you finish downloading, it automatically opens a. Okay, let's just go through it. You don't need to go through this part because I don't want to overwrite the one I've already done. So you don't need to go through this one. Let me just you don't need to go and change that to 7. That's what I mean. You don't need to change it to 7. I just want to be sure that I'm not going to reinstall the same thing that I've installed before. So once you finish downloading, we continue. But in the meantime, let me try to connect my mobile phone to the screen so that you guys can see how to do that same thing on your mobile phone. Okay, so once it's done, you just click on finish, and then you close this page. You don't need this page, so you close that page, and then immediately it finishes, it's going to it's going to open itself, and then you set up the trading account. You open a demo account. So I'll pause that one right now, and then I'll just try to. So it has finished downloading, which is this one, and so you can see there's JAFX demo right here, and there's real. So just click on next, and then if you have a demo account that you have opened on your phone, you click on existing trade account and you put the login details here. But if you are just opening a new demo afresh, you click on next. That's under the new demo, and then you can leave it at the 5,000 USD, 1 to 500. Just click on I agree, and then next. And then what you want to do right here is you want to copy this password. You want to copy the password, Ctrl C, or you right click and click Ctrl C, and then finish. So once you're done, it opens a demo account for you, and then
incoming mail.
And then after that, what you want to do, just click on X on this one, exit, and so you'll be able to see the new demo account right here. You right click on it, and then you click on change password. You right click and you click on change password. You paste the password that you have copied there, and you put in the password that you can easily remember. It has to be minimum of 8 characters with uppercase, lowercase, and digits. And so once you've changed the password, you are good to go. And so the next thing you want to do is to close all these ones one by one. You close them. You don't need all those forex charts. You don't need them for what you want to do. You close them, and then you come to under file, under view. Under the view, you go to symbol, and then under the forex, all these forex media, you double click on them to disable them. Is either you click on it and click on hide, or you double click on it to disable. Is either you double click to disable, or you click and hide them, because we don't want to see them when our indicator is scanning for signals. We don't want to scan for all those forex charts. So if you just go through them, and anyone that is okay, let's go to forex crosses. So for this one's also, you double click them. You don't need them. You disable them. We're just going to disable all of them right there. So then once you are done with that, this one, okay, yeah, it's disabled now. So then the crypto, under the crypto, you double click the ones you want to scan. You double click the one you want to scan. So Bitcoin has already been enabled, and then let's say we want to search, we want to be able to trade Bitcoin Cash dash Edo, basically the one that has dollar at the end of it is what we are going to enable. And this is the Ethereum Classic, this is the Ethereum, the standard Ethereum, and this is ETP USD, IOTA. The ones you want to be able to scan or trade on Binance, you enable them right here. And so once you are done, Monero, Ripple, ZEC. So once you're done, you just close it. And then you can come here and then open those charts one by one. So under the crypto, you'll be able to see those charts one by one. Bitcoin, Bitcoin Cash. So you can open them. Ethereum. And where's Ethereum? Ethereum USD. Where is Ripple? Ripple. So let's just stop there. So once you have done this, the next thing you want to do is to go to the Play Store and download MT4 directly on your phone. So let's do that right away. So on your mobile, you want to search for MetaTrader. Just go and search for MetaTrader, or MT4. Anyone you want to search for, either MT4 or MetaTrader. So in my own case, I already downloaded it. So you install it if you don't have it on your phone. So once you install it, you just I will show you how to then connect it to your desktop right now. Okay, so since we've been able to open a demo account on the desktop, we are just going to connect that same information on our phone. So you click on log into an existing account because you already opened one. But if we are just going to, if you want to open the demo account here before going to the desktop, that's when you click on the open a demo account and you search for JFX. What I'm saying here in essence is this: if you have not opened the account on your desktop, then you can open it here and do the same thing. So if you are doing that, you just come here and then you search for X, which is this one, or simple FX. Can also use simple FX. Simple FX. Okay, I don't think simple FX is here, but I can't find it right now. Maybe I didn't get the spelling right, but we just go with JAFX. So you just put in your information, you put in the amount, and then you click on create account. But we already did that. So what I'm going to do, instead of clicking on the opening account, you click on login to existing. Now just select this, and then you put in the same number that you have on your MT4 is what you put here. So let's quickly get the number out from our MT4. So this number that you can see right here, this 210317667, is what you are going to put in that login on your mobile. So that is 2103716807. So we're going to put the same thing, that's the same number on our MT4, and then put the password that we just changed, and then we log in. So right there we put the 210103716807, and then for the password we put the password, and then we log in. So once you are done, it automatically have that same information there, and then you can go to, you can see that we have the 5,000 right here. So what I want to show you next is how to set up the notification directly on your phone. So I'm going to just click on this, and immediately you click on this, you come to under settings. You come to under setting, and then you scroll down. So once you scroll down, you can see there's something that is called metadata quote ID here, which is D733OD7F. So you're going to copy that same number out, and that's what you put. So we put that D733
Now, the essence of this is very simple. With this, anytime we have a signal generated on our demo accounts on the MT4, it automatically appears on our phone. So you can be in the toilet, you can be on the road, and then you just, see that notification, boom. And with that, you can check for candlestick to see if price is going to be respecting that zone. And you can also look at the structure that price is forming to see if it's going to respect that zone. If you then go to respect that zone, you can go to your Binance mobile app to take the trade. And that's what we're trying to do. Now, this number is going to be different from this number that you can see right here is going to be different from the one you would have. So whatever you have is what you are going to be copying from your mobile phone to the MetaTrader 4 that we just downloaded, and then we enable push notification. So any signal that is generated on your system will then be sent to your phone. And of course, it means that your system needs to be on. That means your MT4, your desktop MT4 or system MT4 needs to be on for it to send the signal. So it means that you can run it on the VPS. That is a private server
which you can subscribe to, or you have a laptop that is continuously on where your trading system, where your trading indicator is. So you don't need to sit on the system all the time from morning to night. But anytime the signal is generated, you can then go to check for the structure and candlestick formation. D7330D7F. So what we are going to use this one for is that anytime we have a notification on our desktop, it automatically appears on our phone. So it makes it easy, even if you are not on the system, you may be on the road or anywhere, and then you get a notification on your phone that price has reached. Sorry, how is the visual there? Is it that very clear? Is the visual very clear there? Are you guys there? Okay. Okay, thanks. So that you can then look forward to taking a price, look forward to taking trade at that level. So you then go to your MT4 desktop right now and put this number in the push notification zone. So let me quickly show you how to do that. So you go to tools, and under tools you go to options, and then under the option you go to notifications, and then you click on enable push notifications, and then it's asking for your MetaQuotes ID, which was the one I copied out then. And so you just copy this and then you paste it here, and then you click on test. Once you click on test, it will tell you to check your phone that a notification is sent to your phone to confirm if it is working. So I just received that notification on my phone right now, and then you click on OK, and that's all. So what then happens is for price action. So that's what I do, basically almost every time, every day, which I use to give you guys signals, and you can testify that it's really not easy staying on the system every particular point in time. So if you want to check the message, you go to okay, let me quickly connect my phone back so that you see how the information is on the phone. Okay, so under the demo account that you have opened, you go to message, and under the message you will click on the message, you will see terminal. You see this terminal. So once you click on the terminal, that's where all those information will be displayed. This was the test message that was sent to me just right now by the MT4, and then you will see most of all the notifications that I've received before when Ethereum Classic entered overbought zone. You will see when price touched KT weekly. You don't really need this. I'm not going to explain that. I connect all these things to my mobile. That means my MT5 trading accounts, my binary, and all that. So I receive notification right there whenever most of all those price actions indicator give me signals. And so that is what you are going to be doing. And what we want to do next right now is to set up our trading system on the MT4 so that we can receive notifications. So this is how the chart looks like immediately you first start. And so you can just minimize it, and then in the market area, you can see right here there's something that is called market. So under the markets, just go there. You will download a trading tool called Triple RSI, and it's very good for you to be able to take trades. So I'm going to take this one up a little, and then under this place you search for triple RSI, and then these are the two indicators you're going to be down. You should download the two of them. You click on download right here. So if you don't have any account before with MQL5, you register with them. But if you have an account with them, in my case I do have an account with them, so I'm just going to go with my login details. So if you don't have account with MQL5, you just click on register before you are able to download. So once it goes through, once you register and it goes through, then search for that triple RSI. Then it takes you here, and then you can download it. It is a free indicator. You don't really need to pay anything for that. And then you also download the triple panel. And yeah, that's just it. So what we want to do right now is to set up our chart in such a way that we'll then get a good notifications. Right now we have the BTC USD chart, and we are on the 1 hour time frame. So what we should do right now is that you are going to click on this triple RSI, and then you are going to attach it to your chart. So the trading strategy mainly just deal with a very simple trading system, the RSI and the harmonic pattern is what we're going to be having on our chart. So for this arrow, you set it to none, and then right now we want to set this one to false. We are going to set it to true later on, but we want to set this one to false, and then we want to receive the alerts on our mobile. So you set that one to true, and then let's just come here, change this color to lime. We can leave this one to 1, and then change this one to red. I usually like this one to be sandy brown, and maybe 2. Okay, so this is what we have right now. So what happened here is this. Let me close this one. And then leave this one open. So what happened here is this. Anytime price goes to the overbought or oversold region, you receive a notification, and anytime it is leaving that place, you also receive notification. So immediately it is crossing and going, gets to this overbought area, you are going to get a notification. But we are not going to take trades yet. We are only going to be looking for taking trades when it is about to leave, and then we also get notification when it is about to leave, which is why you see that in the settings here, you'll see that we have set that alerts us when price has entered the overbought oversold zone, and then also alert us when it is exiting. So when it alerts us, we then check for price action, which is what I'm going to be showing you very soon, and then see if price is going to go in line with what we want to do. If it does not go in line with what we want to do, we trade call. So the next thing we want to put on our chart is the harmonic pattern. So I have the let me just quickly bring in my own harmonic patterns right here, and also the risk management trading tool right here. 1 minute. So if you have the harmonic indicator, you just put it under the file open indicator, and then MQL4, and then indicators, and you paste it there. So I'm also going to bring my money risk trading tool right here, and I'm going to put it under the experts. So let me delete all these ones. I don't need them. I don't need all those ones. So for the money risk management, that one's an expert trading tool. So I'll just put that there, and then right click and refresh. So once I right click and refresh, that's what we have right now. And so for this one, let me leave it as the 5,000, and enable email alerts, and then enable notification, yes. And so basically that's what I'll be doing. So if you have this indicator, I'm using the unlimited version, but you may need to put in your username and password to be able to access it, and then you click on OK. But before it will open on my chart, I need to allow DLL. I need to allow that, and then I'll attach the second one, which is the unlimited 2, and then leave this one to be 5,000, and then put in your login details here, and I think enable email alerts, enable true and true, and then for this one I change it to 21, and then okay. So it's going to help us to automatically scan for the different harmonic patterns in the market. And as you can see, that is what we currently have right now. Let me just reduce this a little. And so the trading system just takes, just considers the harmonic and the trading and the RSI. Let me change the color of this one to sandy brown. I like it, quite cool, sandy brown. Okay. So we are going to go together. Okay, the last one I want to put now is the risk management tool. The risk management tool. Let me quickly bring out the presets so that it can be easy for me to just apply them straight up. 1 minute. So if you have the preset file of the money management trading tool, you just click on load, and when you get to that place, you right click and then you paste it here. And since we are on the Bitcoin chart, we just double click the Bitcoin, and then it will bring the settings for the Bitcoin, and then we click on OK. So you get to see the use of this very soon. So let's go back to our presentation slide and then see what our next step should be. So we have downloaded MT4. We have we've searched and opened a demo account with JFX. We've connected our demo account to our desktop, our demo account of mobile to our desktop MT4. We have changed the password. We've downloaded the RSI, and then we've set it to receive notification. And then we've applied a money scanner on our chart. And then right now, what we need to do is to open two charts, 1 hour and the 4 hour. The 4 hour is going to be naked, which you understand why we want to say naked chart very soon. And then the 1 hour is where we are going to be getting notifications for the overbought and oversold. And then the 15 minutes time frame is where our entry is going to be based on. And then we are going to backtest our trading system and get the win rate of our trading system. That is the RSI harmonic combination, and then determine what our risk reward ratio is, and then use our money risk management to quantify.
So let us go to
risk. That is
our charts right now, and then try to backtest the strategy. Now I'm going to try to make this interactive, and for the next 20 minutes or about we are going to be. And so what I will do is that I'm going to draw. As you can see, this is what we have right now, and I have drawn some lines to RSI indicator, the area where we have the signal from the RSI indicator. Now, there's one more thing I just need to explain to you. We are going to take the trade that see we do not have any knowledge at all about price action. That means we are not going to filter out any bad signal from this RSI. Let us even first see what the RSI can give us. And then we now look at the second scenario where we are going to apply market structure and then the candlestick to see if we should go with that signal or not. Now, to be successful, you don't always go
with a signal generated by an indicator. You need to, by yourself, look at what is in front of you and determine if that structure is going to go in the direction or not. So what I'm saying here in essence is this: before you receive the signal, you need to have first done an analysis down to have an understanding of where price wants to go to. And then when the signal comes, it comes as a confirmation of what you already have in mind. So as an example, let me go to a blank chart right here. You can see at the lower end of this MT4, I have the one that has the indicator right here. Why is this in drawing? 1 minute. I have the one that has the indicator right here, and I have another one which is on the 4 hours time frame, BTC 4 hours time frame. So let's go to that one. Now on this one, you can see that it is blank. It doesn't have any indicator at all. So this represents the chart area where we want to have an understanding of our analysis. Now, if you remember when I was explaining the market structure to you, the chart patterns, I told you that we do have flag, we do have shoulder head, shoulder pattern, and exit area. So right now, what can you see in front of you? Can somebody tell me what we have here? What do we have here? And also, what do we have here? Can somebody help us out? If you have an understanding, just raise your hand and then I will unmute you. Okay. I think Etusi wants to help us. Okay, yeah, bro. Unmute yourself.
Okay, I think this one is an inverted head, shoulder pattern.
I can hear you.
The inverse head,
Hello?
shoulder pattern. Hello?
Maybe he's not able to talk. Let me check my crown.
Yeah, this is an inverted head and shoulder pattern. Then the other one in red circle is a flag pattern.
Can you guys hear me?
Yes, I can hear you.
Okay, yeah. Sorry, I think I switched off my my speaker. Okay, so who is talking right now? Is it Etosi or Mayo Crown?
Mayo Crown.
Okay, so what do we have in front of us?
Yeah, the one in blue circle is inverted head and shoulder pattern, while the other one in red is the flag pattern.
Flag pattern. Thank you very much. God bless you. So we have the flag pattern here. So if you are going to be receiving a trade signal from indicator, you need to first look at what is in front of you. And that's what is going to help you to decide whether to go with the signal or not. Can somebody also help us what we have here? Who can tell us what we have here?
Rising diagonal.
Diagonal. Thank you very much. So price just doesn't move by chance. Price moves based on structures, and those structures are what inform traders, professional traders, to know where price wants to get to. And so even before price gets there, they have an understanding of where price may most likely get to, and then react. Now, unfortunately, for people that don't know anything about the forex market, they just hear that Bitcoin is going up, Bitcoin is going up, people are buying Bitcoin, and then they are going to buy Bitcoin. They are going to be buying they may buy the Bitcoin around 63,000, and within 2 or 3 days, it's going to come to about 47,000 within maybe within a week. It's just because they have not gone to the chart to really look at, they don't have the knowledge. They don't have the knowledge to really understand what is in front of them. And so they are joining the crowd that's saying Bitcoin is going up, and then they are buying it without necessarily looking at what they have. Who can tell me what we have here? Who can tell me what we have there? I need you guys to be interactive because this is the last day, and I need to be sure that you you have been able to carry some people along. So even if we just 1 or 2 person that's able to get it, then I'm okay. So who can tell me the structure we have here? What pattern is this? Nobody is able to tell us. Well, if you remember when I was explaining the flag, I made mention that we can have it like this. and then price is going to move, in a sideways correction, and then after that it will then continue. So this is just what we have. This is a flag setup right there, where price then gave a three-wave correction, did something like this, and then flush down. So price doesn't just move without a reason, and those are the things that the professional traders see, that they use to give informed decision as signals, or they do analysis and order. So we are going to have the 4 hours time frame for us to be able to do our analysis down, to have an understanding of what's going to happen in the market before it then happens. Now, this is the example of the candlestick I told you guys that we are going to be having. Somebody send a chart. Okay, triangle. No, it's not triangle. It's a flag, an inverse flag. So now look at the chart, the candlestick that we are currently having right now on the 4 hours time frame, and you can see which right here we are having a candlestick formation right there. Now, what then happened is this. It means that on this 4 hours time frame, we most likely should be looking at going long if price does not go beyond this. If price doesn't come down to this area, if it doesn't get here, then we should be looking forward to going long. And we are going to be assuming that price most likely is going to be forming a shoulder head shoulder pattern, inverse shoulder head shoulder pattern on the lower time frame. And then you should be looking out for your entry around there. So price doesn't move by chance. Professional traders know what to look at when they are looking at the chart, and they know what exactly is going to be happening very soon in the market. Now, if it's going to be coming down, it means that on the lower time frame, this is going to be like a flag setup, right here. So on the lower time frame, it's got what we are going to then see if price is going to be going up or down. So what I'm saying here in essence is this: for the 4 hours time frame, you try to draw your analysis down to have an understanding of where price wants to go to, even way before it gets there. So when you are then getting the signal on the lower time frame, that gives you that confirms the direction that you want to take on the higher time frame, then it gives you a very good head up to take that trade. So now on the 1 hour time frame right here, so we have on the 4 hour time frame, nothing is there. The only thing that is there is our analysis. If you go to the what do you call it? Let me quickly also share this new share there. Okay, so this is the trading view chart now, Binance chart. Now on this area, you can see that the wrote trading view, and then there's a chart. You can expand this chart right there. So if you click on it, it's going to take you to the trading view of Binance chart. Now we can change that same time frame to 4 hours so that you have the same kind of setup that you can see on the lower time on the what do you call it, on the 84 chart. Now you see that the chart is very similar. As you can see, this is the inverse shoulder head shoulder pattern that we have identified, and this is the candlestick that is forming right now on the 4 hours time frame. Now what then happens is this: on the Binance chart, the chart is usually faster compared to our MT4 chart by about, when I calculated it, it was not up to 1 minute, it was around 30 seconds. But since it's just about 30 seconds, not up to 1 minute, it means that they are close to each other. So what you then want to do is that you want to analyze your chart. You want to analyze your chart on the MT4. You want to analyze your chart on it for determine where your risk should be, your stop loss should be, your SL should be, and then by the time you come to your to the Binance page, you'll be able to then place your trade and see exactly those levels that you can see on the on your MT4 chart. That is how to approach the cryptocurrency market. Right there on the MT4, and right there on the Binance chart, you will not be able to have notification where even if you plug in your RSI. Let's even assume we want to plug in the RSI. Where is this insert indicator? And then we put the RSI, relative strength index. So even if you have the RSI on on the Binance chart, it will not give a notification. So for you to know that price have gotten to this area, you should sell. Price have gotten to this area, you should buy, etc. Which is why we need the MT4 to do that for us. It's going to combine the RSI and then the harmonic pattern for us. So let's continue with what we have here. So on this 1 hour time frame, what I've done is to draw lines where we have received signals of the RSI. And I'm going to assume that we do not have any knowledge of price action at all. So we are going to take the statistics of the RSI signal as is. That means the way we give us, we'll take it as is. So I've not finished drawing the lines. I've not finished. Maybe in the course of this, I'm going to continue putting the lines. So what I'm saying here in essence is this. For this trade, I'm going to assume that we are taking this trade. Now, this is the risk reward part of the trading. You will see there's something that is 9 here, and this is also my trading tool for risk management purpose. Now, if I click on it, you can see that I have the entry line. This is the entry line. I have the TP line, and I have the SL line. So we are going to set a rule so that we will be able to do our backtest very well. We are going to set a rule that when we want to take a trade, our minimum risk reward ratio should be 1 to 2. That means that if you want to take the trade on Binance, on this our MT4, we will first determine where the risk should be. That's our stop loss and also our target. So right here, if we are going to be taking this trade, it gave me a sell signal. So I'm going to click on flip to then determine where the SL should be. So since I'm going with this signal, it gave me the signal around here, around this place. That was where it gave me the signal. And so my stop loss is supposed to be above that area that it gave me the signal. And then the entry is going to be, because prices have moved. So this is where the entry is supposed to be when it gave me the signal. And then based on the risk reward ratio of 2, let me remove this. I don't know if you guys can see this. You can try to zoom. If you are using your phone, you can try to zoom your phone very well. You'll be able to see that what we have here as risk reward is 2.1. This one is 2.1. If you zoom in, you'll be able to see it quite well. So it means that our target here is twice our risk. So our rule is that when we want to take a trade, our reward must be 2 times our risk. So if you are risking this, then we should be able to target this. If you are risking this, you should be able to target. So this is like 2 times our risk. So what then happens is this. If we are taking this trade, what do you feel this trade is going to result? Is it going to be a profit? Is it going to be a win, or is it going to be a loss? So if we agree that it's going to be a win, then I am going to change this one. New share. Let me just share my entire screen. So this is what we are going to be working with right now. So we are assuming that we are trading with $1,000, and then we are going to be risking 5% of our account on Binance platform, and then we are going to be targeting 1 to 2 risk reward. That means our target should be twice our risk, which is 10%, and then our risk reward is 1 to 2. So for this trade, it is not, we cannot judge yet whether it's going to be in profit or loss for now. And most likely what I feel is that even though the overall structure shows a shoulder pattern for a bullish setup, but I think that right now price is currently forming a flag setup, something like this. It's currently forming a flag setup, which means that price can most likely be doing this, go up a little, then come down to this area. Then after that, maybe come down to somewhere around this our target. Then after that, flush up. The reason for that trade, which you may not also know, is what we call the KYM, Kiss Your Mama Goodbye formation. But I don't want to confuse us with that. So for this trade, I think we should just keep the first one, this first line. Since we are in a trade, we don't want to know whether it's going to be profit or loss. We are not going to count it yet. So let's move to the next signal that was generated by the RSI, which is this one. So what I'm going to then do is to click on flip since I want to buy. And then that means my stop loss is supposed to be a distance away from where I receive the signal. My entry is supposed to be here based on aggressive rule. And then my target is supposed to be at least 2 points, which you can see right here. The reward ratio is 2. So for this trade right now, we can also see that we have who can tell me what formation we have here? What is this formation? What is that formation? For us not to waste time, it's inverse shoulder edge shoulder pattern right here. Inverse shoulder edge shoulder pattern, or the cup and handle formation, which I just didn't explain to you, but is almost the same thing as the inverse shoulder edge shoulder pattern. This is the cup part, and then after the cup, price then continue going upward. So with this, you can see that it confirms our buy setup, and then our entry is here, and our target is here, and then our stop loss is here. So for this trade, is it a win or a loss? I'm going to send a poll, and then we agree whether it is the win or a loss. So check and then put in your results immediately. Put in your results. Is this a win or a loss? Okay, 71% says it's a win, and then 25% says it's a loss. So the win gets it. Let me hand the poll right there. So this is the results. I'm sharing it with you guys. So with this, we are going to record this one as a win. That is how you backtest your strategy. So with this, I'm going to put a win here. Win here. So what it means is this. For this trade, we have reached $50 convenient for you guys. Let me change this to $200. So we are just trading with only $200. And then we took the trade. We have reached $10, and then we target $20. At the end of the period, we are making a profit of $20, and then our ending balance is going to be 220. So being a win, we have made 10% on our account. So let's go back to our chart. And then the next signal that was generated by this RSI is this. Now I'm going to flip it since we want to sell. So since we want to sell, I'm going to flip it, and then it gave us the signal around here. Where is this guy? Okay. Okay, the entry. So it gave us the signal around here. We are going to first set our stop loss and then move our entry line. This is our entry line. Move it to where it's supposed to be. Where did we get the signal from? We got the signal around here. That means our stop loss is supposed to be here, and our target about 1 to 2. So this is where we receive the signal, the sell signal from, and then let's assume we took this trade without having any knowledge of price action. What is the result of this trade? Win or loss? Let me send the poll. Win or loss? Okay, this is obviously a loss position. So let me just end the poll right now and share the results with you guys. 67% shows went with loss, and it is obviously a loss position. The reason why it is a loss is that we took our entry here, and then price did not get to our target. It went in our favor only for it to then go back to hit the stop loss. So I'm going to record that as a loss. We have a loss. That we have a loss, we are still in a profit of 4% on our capital. Let's go. Now, the reason for the for we still being in profit is because our target is twice our risk. Our reward is twice our risk. So most time you want to take a trade setup, you take a trade setup that confirms that gives you enough risk reward ratio. Now, if I'm going to be taking this trade, it means that I didn't perform my analysis. Where I'm going to be taking this trade, I will have drawn this up and then this lower for me to be able to see that I actually have an ending diagonal structure, and this is where my entry should be, my stop loss to be here, and then target here. Okay. And so what I'm going to do right now is that I'm going to replicate this this information on a separate sheet, and then I'm going to take the trade as if I am a pro trader and I'm able to do what I'm supposed to do. For the second one, I'm going to record win right here, and this is supposed to change. Let me see. Let me put this win right here and see. So this is how it's supposed to be actually. I don't know why that didn't change, maybe because of the formula. But for here, I'm going to record this one to be loss. Okay. So let's go to the third one. Now the third one right here is what you can see. We have an harmonic pattern that gave us a buy signal exactly at the period where the RSI is giving us a buy signal. This is a very good trade setup. And most of the time when you have those kind of double confirmation for your trade, it most likely means that price is going to respect that signal. So we are going to assume that we want to buy right now. And so our stop loss is supposed to be distance away from the signal area. And then this is our entry. Our entry based on candlestick is supposed to be here after the close of this candle. And then we are going with a minimum of 2 risk reward ratio, which is this one. So is this a win or a loss? It's obviously a win, but I don't know. I don't want to be the one to always make that decision. Let me just win or loss. Okay, 86% says win, and then just 1% says loss. So it's an obvious win, and then we are going to report that as a win. So we put win here. I'm showing you guys how to backtest a strategy. You may decide you don't want to use this strategy. You may decide that you want to. Where is that? So you may decide you want to use another strategy, but that is how to backtest your strategy. Now we were able to get another buy setup here by the signal, and then this is where the signal is generated. Now for this trade setup, our entry is going to be here, and then our stop loss here below it, and then our target is going to be at least 2.0 reward ratio. Now, for this trade signal, is it win or a loss? Setting your votes, guys. Okay, so we have another win. 5 people say it's a win, and then 2 people say it's a loss. So we have a win right there again, and then that's the result of the trade. So I'm going to go to our chart and then go to our model and then record this as a win. So right now we have 26% on our account. And then the next one right here, which one am I using? This one. Okay. So the next signal right here was this one. This signal that was given right here. There's a signal that was given before we had this win. Is this a win or a loss? Now, this one is an obvious loss because immediately we entered the trade, price went against us. So I'm not going to access that one. I'm just going to go to the chart and then record this one to be a loss. We'll try to do at least maybe 10 of the signal, maybe 20, depending. Then the next signal that was given by the indicator is now for this one. If I were to be a pro trader, where will I have taken my trade? Now, if you look at this trade setup, you can see that clearly we have a a flag setup right here. Price was coming all the way down. Let me use a different color in that zone. Price was coming all the way down. And then it made this correction, and then it's crazy to take a signal around here when I know that it just finished breaking out from a correction pattern and it's supposed to go down after that. So for me, I am not going to have taken that trade at all. But as I said, we are going to be looking at those two scenarios where you take all the signals generated, or you are going to apply a filter based on price action. Now, this next signal that was given by, where are we right now? I think I'm kind of lost. Okay, this is where we are. So this signal was given, and then let's look at where our stop loss should be, and then our SL. Our entry is going to be here based on candlestick formation, and then our stop loss is going to be some distance away from here, and then our target is going to be at least 2 point something. Risk reward ratio of 2 point something. So it means that our target is supposed to be around here. So now in this particular case, who can tell me what would have happened if we take the trade? Can anybody help us out? If we take this trade right here and then price went and then started doing this, what would have happened to our trade? Anybody? Does anybody want to talk or help us out? What would have happened if we take that trade? That means we took the trade around there, it went in profits and then started dancing and then started going down. What would have happened? Nobody to help us. Well, what would have happened is this. Okay, Juku wants to talk.
Hello?
Yeah.
I don't know, I'm not sure, but I think what would have happened is because it went against us, it went into profit a bit, then it went down again. So it will result to a loss, I think.
Okay. Thank you. Now, this is that is why I'm asking this question. That's why I try to make it interactive. It's going to go into loss if you did not move your stop loss to entry when you start going to profit. So when you are taking trades and then price have moved in profits, but it has not gotten to your targets, you move this your stop loss to your entry, so that the worst case scenario that happens is that when price comes to this area, it closes you out at your entry, and it means you are not taking, you have not taken that trade. But if you do not do that, it's then going to be recorded as a loss for you. So what are we supposed, or we should just, I'll explain it. We should regard this as break-even entry, break-even position. The poll I created, I didn't put provision for whether break-even loss or profit. I didn't make provision for, but I think it is fair enough for us to assume that the signal got it right, but after some time, price took out as entry. And that's very key. When you take profits and when you take a position and then price are moving in your direction, as at this level, you may have been, if you are using Binance platform, you may have been about 40-something% in profits. And then ideally, what you're supposed to do is to move your entry, your stop loss to entry. That means you change your targets to, you change your stop loss, the price of your stop loss to your entry. So what I'm going to do is to still record this as a loss for us so that we at least see how the trading indicator fare despite this. But in real life, what we are supposed to do is to move our stop loss to break even. So right now you can see that we are at 50-50 win rate, and despite that, we are still 14% in profit. And that is the key of risk management. If most of the time, at any time that you want to take your trade, you always ensure that your reward is at least 2 times your risk. Even if your trading system is as worse as 50% win rate, you'll still be making profit. So let's continue. Let's continue. Which one am I using? This one. Okay. So the one we just finished taking, is this one. So the next one the next one that the indicator gave us is this one. And this is an obvious loss. So what we're going to do is to go back to our trading system and then record this to be loss. So despite it being loss, our win rate is just for 3%, and then we are still 8% in profit. And then the next signal that was given by the indicator is this buy setup, this buy right here. So if we take this buy, it means that we are going to have experienced a loss. And then, okay, Obijalo is raising up his hand. Yeah, I'm going to
Hi, I'm not a he, I'm she. Good evening.
I can hear you. I think we should continue. I don't know whether the reason up hand is intentional.
Hello.
So let's go. Yes, I can hear you.
Great. So I'm a she, not a he. Hello.
Oh, I'm sorry.
It's fine. Thank you. You've been very helpful. I just have a question.
Okay.
Are we always going to be looking at the charts like this? Because I think the confusion for me, right, are the colors and the triangles I can see. I'm not yet familiar with this platform. So I'm just wondering, can this be done without the triangles? Does that ever happen, or is this the way it would look? I'm just
yes, the triangle is harmonic pattern. No, the triangle is harmonic pattern. So let me just take that away so you see how it looks like. So this is how it looks like. Is it better now?
Yeah. So this is clearer. I don't really understand the harmonic patterns. Yeah. Maybe that's why. So when you're asking the questions, I think
now the harmonic pattern, what I explained. Yes, the harmonic pattern, just like I told you before, helps you to confirm entries. As a matter of fact, we've been taking trades basically, majorly based on the RSI. I've not even started looking at money pattern that went in the direction. We have another one that went in the direction, another one that went in the direction, but we are not even looking at that yet. So this is my own trading system that I use to give signals. And then I plug in the harmonic pattern as a second level confirmation of the trade setup. So if I have an harmonic pattern exactly at the area where I want to take trade, for instance, in this case, then it gives me a very good probability that price is going to be respecting that. Even right here, it gave me a buy setup and price went in that direction. But right now, I am assuming that majority of you guys don't have any harmonic pattern knowledge and you don't have a scanner. So we are only just looking at the signals that are generated with the RSI indicator, which is a free indicator, and it's also very good. You understand? Can we continue now? Okay, let's continue. Can you guys hear me? Because I asked a question and she didn't respond. Can you guys hear me? Okay, yeah, thanks. So this was where we were, and I said if we have taken this signal, it will have gone against you. So we recorded that as a loss. We recorded that as a loss. So the next signal that was generated by this indicator gave us a sell setup around here. So what I'm saying is, in essence, is this: even if you don't have any knowledge at all, you can trade the crypto market, but make sure that your reward is at least twice than your risk, and then you are trying to follow every signal that is being generated by the RSI. But for pro traders, we know how to filter out the bad ones from the good ones, which is why I took the pain to first explain the chart patterns and then the candlestick formation for you guys. So I'm going to record this one as a win also. So let me just go here, and then we have another win right here. And so you can see that our win rate has gotten back to 50%, and we are 19% in profit. So after that, the signal we generated, we got from the indicator is this. Now, if you take this trade, what would have happened here is that price will have moved in profits only for it to then come back to your entry. So I always advise that when you take trade, you move your price, your targets to entry immediately, you start going into profit. So since we have recorded one that was supposed to be closed at entry as loss before, we can leave this one out to be that it has closed at break even. Now, for this one, the next signal that was generated by the indicator is this, and clearly price move in our direction. But the reason why I used to ask if it is win or loss is because of our risk reward ratio. So this is where our stop loss is supposed to be, and we are supposed to target at least two 1 to 2 risk reward ratio. So our risk reward is supposed to be here, and which is 2, and then you can see that price got to that area, giving us a win. So I can also record that one as a win. And then we have done 10. Should we go to 15 or should we stop here? That's just how to backtest your strategy. You go to the trading system and then you go into history and assuming where your trade position would have been. Now, this is also another win. Price gave us a self signal around here, and then price went as expected. This one too, price gave us a signal around here, but this one will not hit our targets because our target is supposed to be twice our risk, and most likely our target is going to be somewhere around here if our stop loss is somewhere around here. Or let me just even try to see that. Our entry is supposed to be here, and then our stop loss is supposed to be here, and then 1 to 2 weeks reward is supposed to be somewhere around here. So this also is going to close us out at entry. And so that's how to do back testing anytime you are looking at trade. Now we add some series of losses here. You can see we have a self signal. Can you guys hear me? Hello, can you guys hear me? Please kindly confirm. I think the Zoom just is hanging right now. I don't know. I could just see that it's showing like it's hanging. Can you guys hear me? Okay, maybe I will need to log out my Zoom and log in back. But we are going to round up very soon. But I could see that my Zoom is currently hanging. Okay, yeah, sorry guys, I had a little technical issue, so I'm very sorry for that. Yeah, XOC is raising up its hand. Let me quickly just. Yeah, do you have a question? Please confirm if you can hear me, guys. Then
I can
XOC,
hear
try
you.
to,
I can hear
yes.
you. I can hear you. I
Okay,
wanted to respond to you. I can hear you when we ask you the question, whether we can hear you.
okay, that was when you were raising up your hand.
Yes, yes.
Okay, yeah, thanks for that. And so that is how you basically do a back test of any trading system that you have. You need to look at the risk reward ratio. You need to look at where your entry is supposed to be and where your target is supposed to be. And then look at how it will have played if you are taking it in real life trade. So what I'm going to do, and then we'll round up, is this. We're going to go to the testnet Binance, and then we'll look at if we want to take the current trade right now. How are we going to have done that? How can we approach it right there in front of us, looking at the candlestick, looking at the chart pattern in front of us, and then setting up the risk reward, and then going to Binance to put in the right parameter, that the trade calls and all that. So let me quickly open back the MT4. But do we have any questions? Does anybody have any questions so far? I didn't even believe we're going to get to as high as there. Okay, Chuka has a question. Yeah.
Yeah. Can you hear me?
Yes, I can.
Okay. It's not really a question, but concerning the harmonic scan or pattern, yeah, I really find it interesting as a second level confirmation before you take any trade and all that. So because you didn't mention in the story how we can be able to get that, I think you said this one something you normally use for.
I didn't get you. Sorry.
I mean the harmonic scan.
Yeah.
Yeah, I mean how we can be able to also get that to use during trading as a second level confirmation.
Okay. Is it how to get the harmonic indicator, or how you can use it to confirm a trade setup? Which one?
How we can be able to get it, because I think you mentioned something about it was not really clear how you added it to the MT4 trading platform. Yeah.
Okay, for the harmonic scanner, I built one for my own personal use, and I also give it out to my students who are interested. And it is what I built personally. Anybody that is interested can chat me up. It has both indicator and then it has a dashboard. That means it can display all the signals in a dashboard for you, like Bitcoin, Ethereum, or most of it will list them. And then once you click on it, it opens the chart. And now it's one of the harmonic indicators or harmonic scanners out there. There are a lot of different harmonic scanners out there, but what I observe about most of all those scanners is that they repaint at the D leg, which is why I decided to build one for myself, and then I do sell it for those that are interested. Now, this is the D leg. This is the A. This is the B. This is the C. No. For this one, this is the X. This is the A. And this is the B. This is the C. And then this is the D. So at the D leg, it's usually repaints around here. When price doesn't go as expected, it will keep on going down, going down, going down. So you will not know exactly where it was if you are doing a back test. They are going to be at exactly where it favors them, so to say. So it's not going to give you the true picture of what is supposed to be in a real life trading. And some of them disappears immediately. The harmonic pattern is not respected. They disappear. So when you go back into history, you won't see them anymore. And then when you are trading real life, they will appear to you. And by the time you go with that kind of a trade signal, after some time, your price goes against you and then they disappear. So they confuse you. So it's always very important that you get an harmonic scanner that does not repaint. We are not taking the trade because of that harmonic scanner. No, we are only using it as a confirmation. So it's very important that you make sure they don't repaint. And I understand the reason why they are always built to repaint. The reason is because for this shark pattern that you can see right here, we didn't talk about our money pattern. For this shark pattern that you can see right here, the first entry, based on the book value, the first entry is that it can be at the 88.6%, 88.6, where price respect and then go. So it doesn't need to get to this D leg, which is the 113.1% for it to go. So when they then build those harmonic scanner, they build it in such a way that if it doesn't respect this area, it will still keep on extending up to the 113 and then go. Now, if it doesn't respect the 113 and then goes beyond the 113, it disappears. But for you to have a good trading system for backtesting, it's very essential that you have a scanner or an indicator that does not repaint. The RSI too does not repaint, and it's free. So if you want to get the harmonic scanner, yes, you can contact me for that, private chat me, and then I would look at what I can do based on the concession for people that are here right now. Now, the one I even feel that you should be talking about the most is the money risk trading tool. Now, I don't know, there are some out there too that you can use, but this one right now, it lets you see where your stop loss should be, and then lets you know where your target should be, which is what I want to explain to us. So let's say that we want to take this trade. We have received a signal from this harmonic, from this RSI for a sell. And so this is where our stop loss is supposed to be. And then our entry is supposed to be here right now, although it's supposed to be here before, but because we didn't take the trade early, we put it here. And then our target is supposed to be at least 1 to 2 risk reward ratio. And as you can see that right here, we have 1 to 2.05. The risk reward ratio here is 2.05. So what you are then supposed to do is to you right click on this and then go to its horizontal line properties, and then under the parameters you copy it and then you click on Ctrl C. Then you can go to you can go to your Binance, and then since you want to sell BTC, we are on BTC perpetual. Let me see what is showing on your chart. Let me share the entire screen. So on the Binance chart right here, we are on BTC perpetual right here. On BTC perpetual, and we have the 1 hour time frame. We have the 1 hour time. So what we want to do is to sell. So you then come here and then you put in the TP and SL. You set your parameter maybe about 5% risk that you want to take. Our what do you call it? Leverage is 10. We can increase that to 30. 30 is okay. Can increase that to 30 and then confirm. And then we put this one to be 5%. We put this one to be 5% right here. And then your stop loss, which is the one you have copied, you right click and then you paste it here. I can't see the paste, but you can just press. And we go back to the stuff, and then we come to our targets, and then we right click, we copy it, and then we go back here and then put the paste right here. Control V, we Control V it, and then we can click on sell short. So immediately we do that, you can see what happened on our chart. You can see that it has opened the trade, and right there, that's what we have. So if you are not getting a good understanding of what you have done, you can click on this area to check where your stop loss is, because I didn't see the stop loss and targets affected there. Maybe it didn't affect with this, but let's just put it here. We put it here, and you can see that we're going to be getting 3,438 USD if price goes to our target. And then let's recopy back the stop loss. We copy the stop loss area, and then we'll go back here, and then we'll paste it right here. So you can see that we are risking 1,600. However, our target is 3,400. That means our target is about twice 1,006 times 2 is about maybe 32 or so. So there we have 34, which is about more than 1 to 2 risk reward ratio, which is very okay. So you just click on confirm, and that's all. So that is how you can switch in between the MT4, taking your trade, putting your stop loss and target, and back to Binance and putting in those information right there. So this is exactly where it is. You can see where our stop loss is supposed to be. If price go against us, that means we lose this amount, but we expect that price is going to get to this area for our target. Now, for this particular trade, take it, or I'm going to be clear. Now, remember what I told you before, that price may be forming a flag setup. So it means that if we have is that that this is an you want to wait for it to come down to this area and then look for a buy setup. But if our what we have right here may still be that price is going to scale, then it may mean that price is breaking out. So I don't know. That's just what I have for you guys. Questions. Any question, guys? I don't want us to go more than, I don't want us to even get to 8. Do we have any question? I think I've covered basically most of all the things that I plan to do. The settings of the RSI, you can chat me up for that. I can send you this so that you'll be able to set the RSI. The RSI is free. I can send you that one, and then you have a very good understanding of. You have done justice to all this one. So I think I've tried for you guys, and you are very lucky that I've decided to do it. Okay, Juku is raising up his hand. Do you want to ask any questions, sir? Unmute yourself, sir.
No. I don't want. I just want to say thank you. Yeah, no question. Yeah.
Okay, no problem. Yeah. So we have come to the end of the training session, and if you guys have any question, if you want to open your account or thereabout, I've already sent my ID referral link with Binance in the group, in the channel, so you can use that. And then if you have any question at any time, you can chat me up on Telegram, and if I'm chance, I will reply you. So anyone that wants to, you can unmute yourself at any particular point in time now. I've opened the floor for anyone to open, to unmute and then say anything.
Thank you for this opportunity.
My pleasure. All right, then, in the absence of any questions, I wish you guys the best of luck. And then don't forget to practice. You need to practice quite well before you can master the game. And then if you understand the old technical analysis, you can use the same concept to trade any financial markets, the Forex market, the stock markets, commodity market, and etc. So take care, guys. My regards to your family, and bye.